Today on the podcast, I have Adam Link. Adam has a pretty diverse background. He started off in cybersecurity and as an infrastructure engineer. He held some senior positions at Coinbase and he sold the company. Today, he's a founder of Fireweed Capital. This is a firm aimed at technical people and basically helping them manage their money. And so he's got a pretty interesting background. He's done a bunch of angel deals. He's a startup advisor and really has a lot of kind of technology and operations background. And so this made for a really interesting conversation. And I hope you enjoyed it as much as I did. Welcome to the podcast, man. I appreciate you making the time.
Yeah, thank you so much. Great to be here.
Yeah. So why don't we start off a little bit about your background? We were talking offline before we started recording that you have had quite a journey to get to this point. And so maybe give me the snapshot of kind of what Adam has been doing and what you're doing today.
Yeah, certainly. So I think we'll cover a lot of things, hopefully, during our session today. But just to give you a sense of my background. So I am the founder of Fireweed Capital. Fireweed Capital is in the investment advisory space. So I actually am a financial advisor now, helping folks from tech backgrounds because my background is tech. So before getting into financial advising, I spent over a decade in tech, where I actually started and sold 3 companies. So we can certainly talk about that. I went through the whole startup ecosystem. I did the I-Corps program. I'm familiar with a lot of the generator program out there. I did a program called Startup Chile. So I actually lived outside the country for one of my startups. And then I was a part of an IPO, the Coinbase IPO. So, I got to see that as an employee, kind of going through the IPO process. But yeah, I'm a angel investor. We've got about 9 angel investments, limited partner in a venture capital fund as well. So yeah, no, I've been all over from tech to finance.
Yeah, well, that's pretty cool. And so I think you've worn a lot of hats and you can relate to a lot of the kind of scenarios of this. So maybe talk to me a little bit about, are there any shared experiences over the 3 companies that you started or sold? I always think about what's the through line through some of those kind of startup endeavors?
Yeah. So I will say that the biggest thing you've got to do when it comes to a startup company is revenue. And one of the common stories I see, especially amongst tech folks, and I've had a lot of friends who started companies and a lot of friends who've shut down companies before they even got a customer. As a tech individual, the biggest thing you're worried about is a perfect product. No one cares about the perfect product. No one cares about your release pipeline. No one cares how cool your tech is. The fact that you're on Amazon is enough for anyone. Move forward and go sell a product.
Yep.
And that's the biggest thing I've seen. Where we had our success was launching an imperfect product and continuing forward. And that gives you a revenue number. And that makes you attractive. Users, revenue, these are things that, a venture capital firm wants to look at. When we sold, we actually sold one of our companies to a private investor, and he was looking for a lifestyle business to run.
Yep.
And he bought it because of the revenue.
Yep.
So, right, it's all about revenue at the end of the day. Very rarely do you get to launch a company like Facebook where no one cares about the numbers.
Right. Yeah.
Yeah. That's the biggest thing I've learned.
And I think you're dead on. I think that, if we think about the founders that go through our program, most of them they're product people for the most part. Some of them are technical, some of them are product. We do get some occasionally salespeople, but they do not push on sales nearly enough. Getting those first handful of customers and then basically feeling comfortable doing sales, I think for a lot of technical people is this difficult. And so maybe talk to me a little bit about your journey in that process. What did you overcome to go from I'm super comfortable on the bits and bytes component of it, not super comfortable going out and positioning this? And I think, the other nuance to this is you see a lot of founders want to talk about the feature functionality, right, in a sales process. And what all they care about is solving the problem. What is the pain? What is the issue you're trying to go do? And does this product actually solve it?
Yeah, that's exactly right. I will tell you, as a tech person who's now doing my own business, how do you get over the hump? How do you like doing sales? I hate it. I'm horrible at sales. I am the first person to admit it. I hate that it's a necessity, right?
Yeah.
And really what you end up having to do as a founder is you just have to get over yourself. The hardest thing for me when I had my first company was, how do you make sales, and how do I do it while keeping my good name and this sense of pride, and like I was young, I was accomplished, I came out of school, right? And the reality is, no one cares about you, no one cares who you are, no one cares about your past, right? What they're looking at you for is, can you solve my problem?
Yeah.
And all that sales is, right? Sales gets this nasty word, and I'm a licensed insurance agent, right? Trust me, I can go sell you a product you don't need, right? But at the end of the day, all sales is, do you have a need? Do I understand your need? Can I help you with that need? And that's sales,
Yep.
right? That's what sales is supposed to be. So as a tech person, you look at it, you go, okay, think of a bug. Do I understand the bug? Can I solve the bug? Can I commit the code? And if you can do that, you can do
Move
sales.
on. Yep.
Exactly. Like all you got to do is you got to sit down with the person and say, okay, well, what could be better about your life? Let's. One of the companies that I was a part of an investment in was a company that made sensors for aircraft, for airfields. Sorry. So you could basically land planes in more remote areas.
Okay.
Right. Okay. How do you go sell that?
Yeah.
Right. Like, as it turns out, this is a huge need. Never would have thought about it.
No.
But the founder was basically like, look, all I did is I went out to an airfield and I said, hey, can you land planes when it's snowing? And the airfield goes, no. He goes, cool. I got a sensor that can help you land planes when it's snowing. And the airfield
Okay,
went,
great.
cool, great.
Yeah, where do I sign up?
Exactly, right? Like, it was as simple as that, right?
Yeah.
Like, once you get to the point of, okay, how much is it? You've made the sale. Stop selling.
Yeah.
Tell them how much it is, and
Yeah.
go
Move
do
on.
it. That's the fun part.
Yeah, exactly.
Yeah.
I guess one of the things that maybe connect in that is it's just a process, right? You talk about fixing a bug, right? You basically try to repro it, you walk through the code, you find out where it is. It's a process, right? It's a series of steps. And I think sales is not a binary thing. Like, I think a lot of times people look at it as black magic, right? It just happens in this thing, and there's people that can do it and people that can't. But like, if you have like a demand funnel and you're breaking it down into these micro steps and understanding where people are getting lost, where you're trying to connect with them, what assets really work, what messaging really works at different places, it just becomes something that's a logical extension of anything you do. Like, if you're an engineer, you think in kind of logical terms. And I think sales is exactly the same thing. And I think that's kind of what you're articulating.
Exactly. It's a process, and you hit it right on the head with that funnel, right? It's a process that requires a number of touches.
Yep.
Right. So when I think about, for instance, for me expanding my wealth management practice, I try to go talk to people every day and I say, hey, how can I help you? Hey, do you need help with your finances? Hey, do you need help with this? And you know what? Most people don't care, don't want to talk to me. They might be rude to me, right? And that's sales, right? Like, when you're trying to get your solution out there, it's just talking to people.
Yeah.
And people are busy,
Yeah.
right? The fact that you and I are even talking here came about because we randomly connected, right? But how many people do you have to talk to get one of these conversations? And that's where, as a programmer, you don't think about that, but it could be 100 people to get to one conversation, right? And so what do? Put on your programming hat and start figuring out how to contact 1,000 people if you need 10 conversations, if you need one customer, right? And then use the fact that you're a programmer to scale it.
Right.
And like, that's your secret weapon as a programmer.
So what about narrowing the funnel, right? I think a lot of things that we talk about with our founders is, finding that beachhead, right? Like, figuring out what the persona really is and then narrowing it down. So maybe you do need 1,000, but it's very particular of where this problem resides, who is the buyer in that, and then what's their criteria? Are they in a buying cycle where their software is up and they're, doing ready? Like you said, most people are just in the education phase. And what you want to do is create a digital marketing environment where at some point in time, they're raising their hand and saying, I'm interested. Now's a good time to engage with them, so that you're as efficient as you possibly can with your dollars.
Yes. There's a concept called the mini webinar out there.
Okay.
And if you actually look it up, there are courses on how to do mini webinars. But the sales funnel basically looks like there's about 3% of people in your addressable market that are able to buy, want to buy, and are listening, right? And those are kind of the three criteria you need. Is like, able to buy, like they got money in their pocket.
Sure.
They want to buy, meaning they've got a problem they want to solve. And they want to listen, which means they're open to investigating how to solve that problem, right? And if you align all three of those things, 3% of your market, right? And so then this mini webinar concept takes over, which is basically like, look, in 3 minutes, can you give somebody the reason why you are the person they should spend money on? right? You're talking to 3% that like they are ready to drop money today. Now, a lot of this is B2C, right? But
Hmm.
you can even do it, for some B2B if you're going smaller startups, right?
Sure.
Otherwise, B2B, you got the whole sales process
Yeah.
that's very different.
Yeah.
But yeah, B2C, you think about that. Somebody who has money might be able to spend $1,000 today on a credit card to buy your product,
Yeah.
right? And so how do you get them to separate, them from $1,000 in 3 minutes in a webinar,
Right.
right? And you focus on them, right? Are you the person who is having this problem with your car, right? Do you need to solve this problem with your car today? Do you want to solve it before you pick your kids up at school? Yes. If you answer yes to all three of those, boom, buy my product right here, right?
Right.
I have no idea what your product is, right? But you've created a sense of urgency. You've created a reason to do it. You've
And
brought
there's a
in
compelling
the safety of
event.
their kids.
Yeah.
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 And it's
Yeah.
$1,000. You can solve it today. Boom, go to my checkout page,
Yeah.
right?
That's good. Maybe talk to me a little bit about your experience at Coinbase. So what were you doing beforehand, and talk to me just about the scale during the time you were there, because I'm sure that was pretty interesting.
Yes. So I started in the crypto industry at a small company, and we actually grew that. I was employee number one at that company. We grew that to a sale, and then on the back of that sale, I ended up getting hired by Coinbase. So we sold it to another company. I basically jumped and went to Coinbase as an engineer, and it is a very different scale when you're working with 30 people
Yeah.
to thousands.
Yeah.
The numbers, you add zeros. I thought at one point in my career we were spending, was it $30,000 a month on our AWS bill? That was huge, man. How big 30 grand a month is on AWS? And then I got to Coinbase, and I can't tell you the number, but
Yeah.
I can tell you it's a
It was
lot
much
bigger than
bigger.
30
Yeah.
grand.
Yeah.
Right? And you think, like, you go from a startup to a big company like that, like, you think you know the people, and all of a sudden you get into the enterprise realm.
Yeah.
And now you have the enterprise sales manager, the enterprise contacts, the enterprise back channels. And you just realize as a large company how much more sway you have, right? I can now go talk to vendors. I should say I could go talk to vendors, and you get to talk about roadmaps.
Yeah.
You could just tell them, I want this feature in your
Right.
product.
Yep.
Right? When's the last time you got to talk to Amazon Web Services and say, I need this feature in EKS?
Yep.
Right? Because at Coinbase, we got to do that, right? We got to
Yeah.
tell them what to build.
Well, it was how much you were spending with them. It was a
Exactly.
direct result to that, right?
Exactly. Yep. So yeah, no, I was an engineer, and then in management. So I moved over to management and really focused on building teams. The thing I'm passionate about is helping engineers grow,
Mhm.
right? And now that's engineers growing in finance. Before it was engineers growing in their careers. But that is much the same thing that you do with the startup space.
Yeah.
You know,
So talk to me a little bit
yeah.
about just that growth, or like the, you went from 30 employees to several thousand, and a much heavier organization, I'm assuming. So talk to me about like how your management style changed of just managing engineers, right? Like I think when it's 30, you're all you can be in the same room, or you could be in the same chat, or whatever it happens to be. Processes are pretty light. You're just doing what you need to go do. I was at Concur, like in an enterprise environment, it gets heavy pretty quick. And then, of course, we got bought by SAP. Totally different gig after that.
Yes, exactly. When you're a small company, stand-ups are literally a stand-up.
Yeah.
Right? Like I remember having stand-ups where it was literally everyone just stood up at their desk, and it was like six of us, and you have a stand-up, and then you all sit down again. Right? When you get to a larger company, your stand-ups are more like meetings.
Yeah.
And then much of your day becomes managing up and managing down, right? So as a manager, your job stops being hands on keyboard and becomes more, I'm going to write the document, and I'm going to align the team on the vision, and then I'm going to answer the team's questions about the vision. And then I'm going to go talk about my vision to the next level up and say, here's the vision, here's how I need you to support my vision. Right. And, then that just kind of goes up. And then what you get back down is, well, here's the vision from the top, and your vision is now this. So go change your vision with your team. Right. It's very much a different style. Right. You go from a creative mode, a true strategy mode, to once you become a part of a larger organization, your strategy is contained. Right.
Yeah.
You don't have the free reign to say, hey, we're going to go expand into this country.
Yeah.
Right.
Well, it's funny. You and I had a similar experience. I basically sold two businesses before I went to Microsoft, and Microsoft gave me a job. Even back in the '90s, that was about that big. It was small, And, it was a rinse, lather, repeat. And so I could feel the creativity. Like I just, like you basically had a lot of choice and basically had a lot of autonomy to make good decisions. But that's not what Microsoft wanted. And so I lasted 9 months. I shipped the product that I was on and I was like, I'm out of here. And so kudos to you for figuring it out and scaling with it. I went to Concur that was smaller and then kind of grew with it and probably was part of the problem over time.
Exactly. Yeah. What I've found very interesting about startup founders is you almost become unemployable,
Yeah.
right? If you do it right, right?
Yeah.
And the reason you become unemployable is you have all the skills of a CEO, but you have none of the experience
Yep.
of being a large enterprise, even vice president, right? So like, yeah, you've managed, maybe 50 people. You grew your company. Congratulations. 50 people is a mid-level management role
Right.
at Microsoft.
Yep.
And you're used to being a CEO, right? You had budgetary authority. You could decide what's for lunch. You can decide to hire and fire. You can decide what jobs you need. And you go to Microsoft managing 50 people, and you have an HR representative that you need
Yep.
to talk to about what jobs you want. And they will go talk to somebody who will go talk to somebody who will tell you if you have headcount.
Right. Is there a budget
Right?
for it? Right.
Exactly.
It's got to go through the approval process.
Yep. And you don't control that budget. You
Right.
might control a little bit of budget, but you don't control the bucket of money. You don't have the bank login, right? And so you end up in this role where you have some of the skills that the CEO of Microsoft does because you're used to strategic management and tackling markets and finding product market fit. But the skill you've operated, that's just not the skill Microsoft expects,
Yeah.
right?
Maybe taking that as a bent, though, that I guess one of the things that we see with a lot of founders is that, like that early founder and kind of the excitement and the energy, the communication, the influence, like there's these inflection points as a founder kind of grows, right? And so, we've got some folks that are trying to go from, 10 million to 100 million. And so that's a different step function than it is going from 0 to 100 or going from 0 to 1 or 1 million to 10 million, right? Like they're different skill sets. And so maybe I'm interested in your experiences in some of those step functions, not as a CEO, but just as an employee. Or, I mean, you were a CEO or early employee in some of these, but like, how did your leadership change as you kind of went through some of these step changes?
Yeah. So I will say 0 to 1 is probably the most fun part of any enterprise.
Yeah.
And I say that as somebody now who, I've been in the workforce for a while. I've got the savings. I'm not in any danger of like losing my house and everything, right?
Yeah.
0 to 1 is fun.
Yeah.
0 to 1 when you don't have savings to fall back on is the scariest
It's
part
like
to
the world.
be in.
It's a focuser. It focuses.
Yep. Oh yeah, yeah. When it's Monday and you don't know if you can afford lunch on Friday, like you pick up the phone, you try to make sales, or you skip lunch on Friday. No, what I've seen in leadership style, 0 to 1 is it's all hands on deck. It's whatever you can do to survive, right? Even getting up to that first $1 million in revenue, there are times when you look at payroll, and you're sitting there and you're going, cool, that comes out in 48 hours. That's not the size of my bank account right now.
Right.
And I got 2 days. So where am I going to get that? Right. You can open up a credit card, and you're making those trade-offs, right? It's all about survival mode. Where I've seen actually some of the hardest is once you hit that million, or we actually had this at one of our companies, we raised a ton of money and the pressure was off. And that is the scariest part to be in as a startup company because there is an end date. Your experiment runs out of money without sales, right? And that's all a company is just an experiment to see how long you keep this thing going.
Yep.
And if you raise enough money that the pressure's off to make sales, you've created a really cool non-academic lab, right? Because there's no pressure to make sales. You can make payroll, and all of a sudden, you can just play with products and throw it against it. And that, let me tell you, that's a fun environment to be in. I've been in that environment before, but it ends abruptly when you run out of money.
You must have had different investors than I did, because like those guys were not like saying, they're mostly like, "What are you doing with that money?" And then where's the return? So
exactly, yeah. Well, that was the early days of crypto, where it was just kind of like you got to make money eventually. Yeah, but we know crypto's going to be something, so just kind of figure out what is crypto, how do we make money in crypto, right? What can we build to capitalize on an opportunity? And that was the company that we actually ended up selling, and we made some money, right? I wouldn't say that was not a success for investors, I don't think. right? That was one of those, portfolio companies. If you look at a venture capital portfolio, like the
Yep.
110, 100x's, a couple 10x, a few of them 1x,
Yep.
and then some of them lose. We were probably in the 1 to 2x in there, right? Like, yeah, we didn't piss off our investors too much,
Yep.
right? But never really found product market fit, and so when you raise that money, when you're in that period of you've got enough revenue coming in, like I said, that's a scary time to be in because you kind of have to decide what you want to do with the company, right? Are you going to scale this thing now and try to become your own company, or did you build a company for sale?
Yeah.
And there's nothing wrong with building a company for sale. You just have
Yeah.
to know that you built a company for sale,
And
and then you
execute on
tighten
it.
up operations.
Yeah.
Exactly.
Right.
Yeah.
Yeah.
And then you tighten up operations, you get a good multiple, and you sell.
Yeah.
Right. But you'll hear this all the time. Start with the end in mind. And let me tell you, as an investor as well, sometimes you get founders that come in and say, "I'm going to build a company to $100 million. I'm going to sell to this company." And as an investor, I look at that and I go, "Great. First of all, no, you're not. Second of all, you don't even know if this
You
company's going
don't
to
know.
buy you."
Exactly.
Right? But at the very least, what it tells me as an investor is you've thought about this.
Right.
Right?
Right.
And so if you say, "I'm going to grow this company to $10 million in sales and we're going to sell to a larger upstream competitor," perfect. What I'm looking for is you got a plan to get to $10 million in sales. And beyond that, we can bring in a company who specializes in selling companies, right? But if you know your goal is 10 million in sales and you've got a product line that gets you to a million, that's a concern.
Right.
When you got a product line that's going to take you to 100 million, whoa.
Great problem. Great
Yeah,
problem.
exactly, right? But it's also a different company then, right?
Yeah.
Like if you told me you're going to get to 10 and sell, and all of a sudden now we're talking about $100 million, well, it's a different investment, right?
Yeah, and so maybe go backwards. Like, is there things that in hindsight you would have done in those companies that you sold or that you were in that you would have done differently? Given hindsight in the perspective and kind of experience you have now.
Yeah. So the one company that we started and sold, it was a mobile application company, and really turned it into a lifestyle business, right? Where we ended up selling it was to a wealthy individual who was looking for basically passive income as a lifestyle business. And, we sold it, and I think it worked out pretty well for them. I think they tried to grow it, and met with some mixed success, right? Because they were trying to grow a passive income business, which there's really a cap on how big you can
Sure.
grow those types of enterprises.
Yep.
Looking back at it, I would have been more explicit about what we were trying to build, right? I think, when I say you can tighten up operations and get a better multiple, right? We did not come to that table with a expense side of our P&L that made sense. And we kind of had to back into, well, what you could do
Right.
if you didn't treat this, like we were treating it, is here's what you could do. And so we got a little lucky that we sold on hypotheticals. Whereas, most sales, you're going to want to sell on actuals.
Yeah.
Right. And so what you want to do when you're looking at selling like that type of business, if we had thought about this better, we would have taken 6 months and we would have really tightened up our, customer acquisition pipeline. We would have tightened up our expenses. We would have really, slashed any non-essential expenses and shown as high a profit margin as we could.
Yep.
Because that's what this investor was buying, was a profit stream.
Yep.
Right. And so if we had tightened up our little expenses that we were, using for lifestyle, like taking that out,
It would have been worth more
much
valuable.
bigger profit stream. Exactly.
Yeah.
Right. And so that's what I would have done. And what I really learned too is, if you're going to go try to sell, is be explicit, right? Be explicit about that sale you're going to make.
Yeah, and so maybe I'll even dig a little bit deeper because we see some of these problems too, like just having a good chart of accounts, right, and understanding how somebody's going to look at your business. I think that when founders put charter accounts together, it's probably way more detail and uneven. And really what you want to do, especially for your type of business, right? There's kind of usually a charter of accounts for your type of business. And so a good CFO or even accountant will basically understand what that is. And so get that done early. And then, like you said, just basically understand what you're trying to sell for and then optimize your books and finance operations to go do it. But like the charter of account thing, like it's just amazing. Anytime we see companies ready for investment, how trashed some of that stuff is. And it's like not even apples to apples, right? Like when you're trying to compare things. And maybe you see that from an investment standpoint as well.
Yes, get your books in order.
Yep.
Right? A bookkeeper is not expensive. You don't need a CPA. You need a bookkeeper.
Right.
Hire a bookkeeper, get your books in order, be able to show a P&L, be able to show a balance sheet that makes sense. If it comes out of QuickBooks, that's obvious, and that's okay.
That's okay for a long time. For a long time.
For a very long time. Yeah.
Yeah.
Yeah, exactly.
So maybe pivot a little bit to like the infrastructure layer around these startups, right? You were talking before we got on about your experiences, with G Beta and then in Alaska, some of the services and accelerators. We're trying to do some things differently with Wildfire. I think that there's maybe an over focus on, pitch decks and getting to revenue, or getting to raising capital and not getting to revenue. Where I think, you don't graduate from our program unless you have a shipping product and revenue. Like you have to have revenue to graduate. And so it's a little bit different. But it sounds like a lot of those organizations and a lot of the programs that you were able to take advantage of were beneficial to kind of nurturing you through that process.
Yes. In the startup world, amongst the investors, there's something known as the golden rule. And the golden rule for investors is the one who has the gold makes the rules. Right? So
Yep.
This is the most important thing to remember as a founder. When you take someone else's money, you have to deliver on promises you've made. And that investor is not giving you money. They are not a charity.
Yep.
They are investing with purpose and they expect a return. They expect you to be the person that 10x's the money they gave you. So what do you do if you are not ready to commit to that level of responsibility, right? And by the way, word gets around amongst investors, right? If you take money from an investor and you lose money because you did something really stupid or unethical, you are uninvestable, right? Like word gets around. I know a lot of the angels up in Alaska because I was a part of that network. And there are also people that if you take someone's money and you lose that money, but you did it and you learned something, congratulations, you get a second round.
Yeah.
So what do you do outside of going to venture capital or angels? There's a lot of government programs. The government wants to see you succeed. And especially in rural areas, in places that are not coastal cities, there's a lot of government help. This takes the form of things like grants, right? If you're in an underrepresented area, or even better, you're an underrepresented minority, the government has money. So go look at grants. Go look at things like ICOR, the National Science Foundation, wants to invest money in technical advancements.
Sure.
I have a friend of mine that built a bike spoke company. They made a new carbon fiber filament that they put on a bike spoke. The National Science Foundation gave them seed money because they had an invention, and they are now, I think they've had their bike spokes used in the Tour de France.
That's
right?
awesome.
Like how cool is that, right?
That is super cool.
Their first investor
Especially
was
as a
the
bike
U.S.
guy.
government.
Yeah,
exactly, right? Yep. The first investor was the U.S. government, right? So there you go. The government wants to help. They have grants, and especially the Small Business Administration has money as well. And then there's things like what Wildfire is doing, where you have programs that are funded in part by the government, whether local government or federal government. Up in Alaska, they actually had a pipeline where you would take seed money from a company called Launch Alaska. They were a nonprofit funded by the government. Mm-hmm. And then the next step, if you were successful, is you go on to their sister program, which was another nonprofit called the 49th State Fund. And that was funded by the government, right? It was a venture capital firm funded by the government. And the explicit purpose was economic development, right? And so this idea of these government agencies don't want equity necessarily. What they're after is the long play. Can you provide jobs in our town?
Taxes. Yeah.
Yep. Can you provide a tax base? Right? And so if you don't want to give up equity to a venture capitalist, you start looking at programs like what you've got, where equity is a part of it, but the value you provide is a tax base to the government. And that is a broader, longer term goal. And so that gives you a little bit less strings attached to the money.
Yeah, I think that's totally true. And I think that most businesses are not VC fundable, right? I think that's, and I think, to be honest, in a lot of cases, that's the badge of honor. I raised a whole bunch of capital where, I know a lot of founders who, walked away from a business they worked on for 10 years for, dilution reasons. They didn't make anything. Right. And so they lose control in that process. And, may have been better off bootstrapping it or taking a little bit less money, retaining control and growing slower. And so I do think the natural inclination should be to bootstrap or find other non-diluted ways to build your business. And then if you really have something that could scale, have the conversation but like you said, do it with your eyes wide open because there are strings attached.
Yes. If you're getting into the startup world to make $1 million, the easiest way to make $1 million in the startup world is to exit the startup world, go become a plumber,
Yeah,
and go into the
exactly.
trades,
Yeah. Or
right?
start with 5
Because
million.
well, exactly, yeah, that's the second easiest way, right? But to your point, like a venture capitalist will never fund a plumbing outfit. It's just
Right.
not the profile of investment they're looking for.
Right.
But you get a trade like that, and a lot of plumbers, by the time you're on your third truck, you're probably close to $1 million in net worth,
Yeah. Yeah.
right? But again, like that, those types of businesses, that's what the government's going to fund because that is a mainstream business. It's something that it's good for a town, right? It's good for jobs. It's a solid economic engine. What the government's not going to fund is the next Facebook.
Yeah.
It's way too risky, right?
Right.
And so that's where you got to kind of, if you're building the next Facebook, you got to kind of slide in between the gray zone of government funded programs to take money where you can, to learn where your market is, and then maybe once you have the engine of growth going, you use VC as gasoline and really scale your business.
Yeah, another one that that we see people using too is the Small Business Administration (SBIR), the Innovative Research Grants. A lot of the states in the middle of the country do pretty well. They get a disproportionate amount. A lot of states will match those. So if you're getting 500,000 from the federal government, the state will give it to you. So I do think you're right. There's a lot of programs there. Even ours. I mean, we don't guarantee money at all in our program. What we do is we say that there's probably $50,000, $60,000 you can get, but it's all gated. And so that's one of the things that we like is instead of Techstars giving you 100 grand and you blow it, I think what we're trying to say is tell me what you're going to go do in customer discovery. And if you need 2 grand for that, let's make sure you got it because it's going to be done. But by the time you get to go to market, what experiments are you going to run for 5, 10 grand? And then do they happen? And do you need more? Right. And so a lot of this is trying to build some capital efficiency into the way you think about it. So that every dollar, you're trying to get $2 or $2.50 out of it, not 50 cents, which too much happens that way.
Yes. I remember reading, what is it now? It's one of the angel investor books, but it basically says any company can scale if you sell $1 for 90 cents.
Yeah.
It's not hard. You can scale that business to $200 million in a week.
Yep. Yep.
Right? Yeah, but you are losing money doing it.
Yeah.
Right?
Yeah.
So you got to make sure that you're making money, right? And again, that gets back to if
or
you
value,
overfund,
creating value.
Yeah, exactly. Yeah.
Yeah.
If you overfund yourself and you find yourself in a situation where you can make a product that you can sell for 90 cents and it costs you $1, you got an end date on your experiment and
Right.
you got to figure out what you're doing, right?
Yeah. Up front, you were talking about you've done 9 angel investment deals. Being an early stage founder, seeing some growth. How does that calibrate what you're looking for in angel network or angel investing? Do you pick a vertical that you're interested in? Is there a set of criteria that you're looking for? What have you learned kind of through that entire process? Because if I look at my very first angel investment I've done versus where I'm at today, there's a maturity curve. There's no question about it. Luckily, I'll tell you, the very first one I did, I think I got a 3x on it in 9 months. And so my wife was like, "This is easy, way to go." And I was like, "None of them work this way, honey. It's almost the worst thing you could possibly do is actually have success on your first one that early or that quickly."
Yes, that's like stepping up to bat and hitting a grand slam and expecting baseball is grand slams every time, right?
Every single time. Yeah.
Yeah, it's not. It's not at all. No, so my first angel investment I did was it was on AngelList, and I just found a company that I liked. They had a cool looking pitch deck. I kind of knew the space, and I thought, I'll throw some money at this. Why not?
Yeah.
Right. I've matured a lot since then.
Yeah.
Because every angel investor, every venture capitalist has their lane. Right. For me, I know SaaS. I know crypto, though I won't invest in crypto. I know a little bit of med tech through my wife, who's in medicine. I know a little bit of ad tech through some of what I built historically as an engineer. What I do not know, I don't know retail. I don't know food, right? I really don't like apps. I've built apps. I really don't like investing in apps, right? And so why do I have these guardrails, right? Well, it's things that I know and I don't know. Yeah. I have no idea how to run a restaurant.
Yeah, circle of competency.
Yep. I am dumb money when it comes to investing in a restaurant.
Yeah.
And that's a scary place for me to be, right? Because it's my money I've
Yeah.
worked hard for, I'm investing. And if I don't understand how to give advice, how to help this person that I'm partnering with, um, I'm useless. And as far as I know, they are running a scam and I'm just losing my money, right? And so it's not good for anyone, right? And that's, as a founder, you have to recognize that sometimes the no's you're getting are you're approaching someone who only invests in food and you have a really cool app.
Yeah.
They don't
Not
know
a
anything
good
about
fit.
apps, right? They're
Yeah.
just going to say no. And they
Yep.
don't even give you the time of day. And it's nothing about you. It's nothing about your deck. It's nothing about your idea. It's not saying you're going to fail. It's that you approached the wrong person. So what I look for now is, frankly, I invest in the founder. And this is like the most tired trope ever in venture
Yeah.
capital. They don't invest in products, they invest in founders. But that's 100% the reason. Because what I look for in a founder is, do you have a sense of what you're building? Do you have financial statements? Do you have financial projections? And I'm not looking for anything in particular in those projections. What I'm looking for is competency. Can you make a P&L? Can you think enough about where your money is going to be coming from? And that's it. Because everything you show me in numbers is 100% wrong,
Right.
right? What I want to see is you know how to do it. Same thing with your tech, right? Is your tech relatively okay? Are there any glaring issues that I see? If you used a third-party developer, that's fine. Look, I don't care, but just do you have a process, some way to get bugs out of your tech and some way to keep building, right? Did you build your tech in such a way that if your developer leaves, your company's gone,
Right.
right? That's a huge red flag, huge risk,
Yeah.
right?
Yeah.
That's why that's why you look for a technical co-founder,
Yeah.
right? Does the person who's writing the code have a reason to stick around till 2 a.m. when shit hits the fan? Because
Right.
it will,
Yep.
right? And then past that, you as the founder, have you failed before? The riskiest investment is a founder who is confident that they are competent and has never failed. Because what you're investing in is an ego. And I don't invest in egos, right? Honestly, you show me somebody who's failed,
Yeah.
and the first thing I want to know is, what did you learn,
Yeah.
right? Like, did you get knocked around and what you learned was, oh my gosh, never go to market this way?
Yep.
Or I vastly misunderestimated the cost that it takes to bring my product to market and I ran out of marketing dollars.
Some humility.
Cool.
Yeah.
Yeah,
Right.
great.
Yeah.
Okay, so if you're going to tell me you ran out of marketing dollars, I'm going to look at your finances and say, do you have enough marketing dollars? I'm going to bug you on that point because I want to make sure you learned your lesson. And if you can tell me I failed, I ran out of marketing dollars, and now this time I'm raising $1 million in marketing. Sweet.
Yeah.
Perfect. Okay, you are the most investable asset because I've learned that you as a founder, when your marketing plan goes wrong, you can pivot, right? Because at the end of the day, nothing you show your investors is going to be what you sell. That's not the end.
How many investments have you done where it's been almost a cold intro and like, there's no continuity to it, right? Like, I guess I've gotten to the point where a lot of the stuff I've done is you're telling me a story over a period of time. I always look for traction. I think like execution is like one thing because I probably overpronate on this where it's like, if you're good at executing and you're good at filtering data, you'll pivot, right? And then if you can continue to execute and pivot in the right direction, your chances of getting to something are good. And so, I probably have a bad rap, but it just takes, there's many bites of the apple. I want to talk to you early. And then over time, I'm just basically building a relationship. Whereas I see, like, I belong to a couple of angel networks and, you got a guy who comes in and pitches, maybe you're on the diligence team, but that's it, right? That's all you get. And so what I like about us from an investment standpoint with Wildfire is we collect all the data through your 6-month journey. And then we can publish to an investor portal all of that data if you allow us to. But at least it gives way more context to that investor on like what was your experience over a duration versus a kind of a snapshot in time.
Yes, the story, the context is so important, right? Most of the folks that I end up investing in, I know them
Personally.
I know them. Yeah.
Yeah.
And it doesn't mean that they came to me with an investment or they didn't come to me with an investment to begin with. But I get to know them enough that they become acquaintances, if not friends, before I actually invest.
Yep.
And the reason for that, just like what you guys are doing over 6 months, is you want to get to know the person.
Yeah. Yep.
right? I get emails all the time for investment opportunities in my inbox, right? You can't swing a dead cat without hitting an investment opportunity once you have, money and people know you have money to invest. It doesn't even
Yep.
matter how much money you have to invest. So trust me, there is no shortage of deal flow. What I have a shortage of is people willing to build a relationship and show me progress, right? Sometimes, and honestly, my knee-jerk reaction is no, because I just don't have time,
Yeah.
right?
Yep.
And a lot of times that's what you're going to get as a founder is the first reaction is no. And no is where the sales process begins,
Right. Right.
right? No, I'm not interested. Okay, great. Is it a market fit? Do you just not invest in my type of company? Is it the
Yep.
stage of my company? Give me a sense of why it's a no. Like that's a perfectly fine second email
Valid
to send
question.
back,
Yeah. Yeah.
right? And oftentimes it's like, well, look, honestly, I have no context. I don't really know enough about anything. And you go, okay, great. Tell you what, can I bring you along into the journey? Can I put you on our newsletter list? Can I send you updates as they happen? Right? And all of a sudden, like you'll
Sure.
get an email from someone and it's like, oh, hey, like we talked 2 months ago. You said you wouldn't invest, but just so you know, we got a new customer who's interested. Sweet. Right?
Awesome.
Like all of a sudden now you're back on my radar with an update. Right?
Yep.
Or, hey, we just launched our next version of our product. Right? Just little things that show you're still engaged, you're still building, you're still going. Because you'd be surprised how many times you get an investment where it's like, I want money. Cool.
Yep.
Can you build a relationship with me? 3 months later. By the way, did you ever do anything with this? Oh, no. We shut down that concept in about 3 weeks. It wasn't going to work.
Yeah. Glad I wasn't on that train.
Yeah, right? Cool. Glad I didn't write a check.
Yeah.
Right? Or even worse, no, we're still raising money. Okay, well, what have you done differently in the last 3 months? Nothing. So you've just been pitching investors? You didn't build a product? You didn't try to go to market? You did nothing?
What about your commitment to them, right? I think I've gotten to the point where I'm doing less of them, but I'm more heavily involved, and that's part of the criteria. And so, I'm not trying to be onerous. I'm just trying to figure out, like, is there ways to get transparency and data? Like, I basically make it so that I need to see Chart Mogul. So I basically get like Chart Mogul from you, and I've got access to it, so I can see what's going on. And we got periodic meetings where I can help you, right? And so, if things aren't going well, I'm spending more time. But if things are going fine, maybe they're sporadic. But I have at least a dashboard to understand what that investment is doing, and it's not a narrative that somebody can craft for me.
Yes, and that is what separates smart money from dumb money. And I've been both,
Yeah,
and I
me
never
too.
want to be dumb money, right? When you get in trouble, smart money is able to come in and help. And smart money can help in a number of ways. One of the ways that people usually want, and this is one of my weak spots, is can you help me raise more money? And a good venture capital, a professional venture capitalist or professional angel investor will usually have folks in their network that they can say, yeah,
Sure.
you need the next 10 million, next 20 million. Here's the guys. That's not my network. I don't have that. What I help out with a lot of times is the technical side.
Hmm.
It's like, okay, well, where are you hitting the technical blockers? Well, my product isn't scaling. Well, why? Right? Can I look at architecture of your product? Can I add value in that way by saying, okay, well, can you tweak this deployment process? Can I come in and talk to your engineers? Right? Is it as simple as I can add in a ticketing system for your tech stuff? Right? Like that's kind of how I help.
Yep.
But I look for that. Right? Like I actually had a founder one time that my background is tech. His background was not. And I was telling him how to shift his product and his product delivery pipeline so he could iterate faster. And my gosh, this dude pushed back on me. And let me tell you, I've never shut a checkbook so fast
Yeah,
because I was like, look, you don't know this. This is literally my area of expertise.
And you're telling me no.
Yeah, and you're telling me I'm wrong. Okay, look, this is not going to work out, right? And again, it gets back to humility, right? Like he hadn't failed before, right? And it's just like, look, dude, like when you fail, I'm here to help. Trust me, I'm a helpful guy. But that's what I look for now, right? I'd rather be plugged in to say, can I help you with product development? And now it's not so much writing code. I don't really want to get in there and write code for you.
Sure.
I'm not
Right.
your developer.
Yeah.
But can I get in there as a CTO,
Mhm.
an ad hoc CTO and say, hey, by the way, do this, right? And that's going to shift your product. That's going to unblock you, right? So that's where I like to get more involved now. And to your point, I do look for those opportunities, right? Because
Yeah.
I also like building companies. I
Yeah.
also think this is fun, right? So it scratches my itch of creativity too.
So talk to me a little bit about like, is there any, is the AI component of this like something you've been keeping up to speed with, and it's like a part of the talk track with some of these technical or people, the technical teams that you're working with? Because our world has changed so dramatically over the last couple of years, right? I think like just even getting MVP development, right? Where 5 years ago, 7 years ago, you would have spent 200 grand. Today, you can get something that maybe you either do yourself or for 20, 30,000, you can actually have something that looks pretty good that you could probably scale, at least getting through your first series of customers.
Yes, AI has fundamentally altered the landscape. And I will say, I practice what I preach. I do still program. The entire Fireweed Capital website was built by AI. I use Cursor on a
Yeah.
daily basis.
Yeah.
So if you are even remotely technical and you are not using something like Cursor, like it's $20 a month,
Yeah.
get it, start using it, start using AI. It is just such a game changer.
It is.
And it will delay your first hires, right? You don't necessarily need a programming team. You need one person who's competent enough to rip through Cursor very quickly,
Yep.
right? I think I use Cursor was telling me my stats. I think I used like 600 million tokens in the month of December,
Wow.
right? So like a sizable amount of interactions with AI,
Yeah.
right? But a lot of where we're shifting now in development is using AI to fill out a product around a spec. And so, vibe coding is real. If you're going to come to me as a founder and you say, I vibe coded this, solid, great, I love it. I'm not necessarily going to hold that against you as long as you can show me technical prowess outside of vibe coding.
Yeah.
I still get scared of somebody who's not technical saying I vibe coded this app because you got security vulnerabilities you don't know about and you're just
Sure.
waiting to get hacked.
But I think like,
Right.
It shows some initiative though on the front end, at least from an investment perspective, right? Like it's not saying that that's the end all be all, but I'd love to see more founders playing around with that as they come to us. Instead of a pitch deck, show me the product. Show me like a vibe coded product as a starting point instead of this pitch deck or in conjunction.
If I can sit there in a meeting with your pitch deck and upload pitch deck to Cursor and say, hey,
exactly.
Cursor, can you build me a product?
You should be able to do it too.
Exactly, yes. If I'm doing that while you're pitching me, then we've got problems.
Yes.
Which I haven't actually done that. I need to do that.
Yeah.
I think the next pitch I'm going to have, I'm literally going to take their pitch deck, put it in Cursor, and ask Cursor to build the product.
Sure. Yeah, that's pretty good.
Right?
You have to let us know how that goes. That'd be pretty cool.
Yeah. And if I can do that as an investor, you can do that as the founder, right? So bring me a product, show me how it works.
Yeah.
It also does lead to, your AI prowess allows you to modify stuff on the fly, right? So, and I haven't seen this yet in a pitch, but what I think would be really cool in a pitch is if you get a good, strong technical founder, if you can modify your product on the fly in a dev environment with something like Cursor while your founder's talking, investors like, hey, this thing would be a really cool feature. Like if you can do that in the pitch, right. I think as an investor, I'd think that'd be really cool, right? Like
you're responsive, you're listening,
exactly.
You're executing, right?
Yep.
All those things we're talking about.
Yeah, that super tight turnaround, man, that'd be cool as an investor.
What else can you do?
Mm-hmm.
Yeah. Well, maybe as we're wrapping this up, like maybe the last pivot is, going to like your current gig, which is wealth management. So maybe talk to me a little bit about kind of that transition from exiting technology, having a nest egg that you can live on, to helping other, technical people basically manage money and kind of fulfill their dreams.
Yeah. The reason I got into wealth management was I've always loved finance. Mm-hmm. And for me, I found that I was giving engineers basically free financial advice on an unofficial capacity in my job a lot, right? And I thought, I should get paid for doing this. And so I got my license and I launched my wealth management firm. And now I get to talk to engineers on the flip side. And I will say, I also love startup founders. Mm-hmm. One of the most dangerous startup founders to be is a startup founder who has their finances in order, who knows their own runway, and who knows what their exit plan is, right? If you treat your finances like a startup, right? What's my runway? Do I have a solid cash cushion? Yeah. And really what I love about that as an investor as well is if you find a financially sound founder, you know that they're driven because they've got a goal, but you also know that they're not about to sacrifice their morals for a meal. Yep. Right. And so like that for me is what I really focus my practice on is how do I help other software professionals get to the point where you've got that solid foundation that you don't have to make the choice between your morals and a meal. And when you have that money, when you have that foundation built, You can look at a project at a corporate enterprise and say, I don't like this. This isn't fun. I'm going to go find something else. And you're okay to go job search for 3 months,
Yeah.
right? Or if you're wanting to go into the startup world, right? You have that financial foundation to say, I'm going to give it 6 months. I can put $100,000 of my own money on the line and go see if I can make this thing work, right?
Yeah.
Or even 10,000 of my own money. And so that's what I really focus on now in the wealth management side is, what are your goals?
Yep.
And how do we use your money to make those goals happen? It's really individualized advice for, every software professional. And then the back end is I'm also a software professional, right? So we can also talk code. Like I said, I vibe coded our entire website and it's in a GitHub repo because of course I'm a software developer at heart, right?
Yeah, you got to do that.
Of course our website has a deployment pipeline.
Yes. Well, I would just say my own personal experience, it does align with what you're saying. I think the other piece to this is that I think is important is, I'm sure I could have done some aspect of the analysis and picking stuff and doing this, but that's not what I was good at. Right. And so basically for me, I think as Concur was growing, having somebody that was a partner like you, that basically I could say, here's how much I'm putting away. Here's what I'm doing from a diversification standpoint. And that person basically took care of it and managed and gave me the peace of mind that, it's moving in the right direction. And the other part is, especially today, my wife, when I look at investments, my wife always comes and says, can you do this? Are we fine? Are we protected? Is the balance? Is the lifestyle that we want? What type of risk are we doing? So it's a third party that's been independent, I think has been really good in kind of our marriage from that perspective. I'm certainly more risk tolerant than my wife is. And so, it's a little bit of a referee. So I do think that there's doing this early and building some plans about where you're going is a pretty critical step. And I think, the other part I would say is, we had a really good tax planner. He was a CPA, but he was really a tax planner first. And so if you have taxable events, especially as a founder, really just understanding what you can go do to manage and plan for it is super important too.
Yes, I totally agree with that. You mentioned your wife, and I see this a lot of times actually with technical folks. Engineers love optimizing.
Yeah.
Engineers hate paying fees.
Yeah.
And so a lot of engineers will be like, look, I'm just going to go to a robo-advisor.
Yeah.
Right. And okay, at least you're doing something.
Sure.
Right. What I will tell you, though, is as a financial advisor, when you are gone and it's your wife or your partner or your spouse, who are they going to call the day after you pass away, wondering where they pay for groceries?
Yeah.
Right. And so even as a financial advisor, I have a contingency plan. When I kick it before my wife does, she has the person to call and she has the access to the bank accounts, right? And so you got to look at it in that sense as well, that, if you are sitting on $1 million as a software professional, and you are managing that yourself, you are saving money on fees. I'm going to be more expensive than self-management.
Sure.
But if something happens to you, who is your spouse calling to ask what are they going to do about that $1 million? And let me tell you, you don't want them calling somebody for the first time saying, I have $1 million to invest, because what a financial advisor sees is money signs. Right. What you want them to do is call someone that they know who's seeing a person, who's seeing a goal, who's seeing your family. Yep. And, that's why, at least in my mind, you start these relationships early. Yes, they're going to cost a little bit of money more than managing it yourself. But like you said, somebody else is looking after it. You can go focus on your craft as a software professional, as a startup founder, and you know that your family is taken care of. There's that continuity of what you're doing, why your money is there, and in case anything were to happen during your life, which it happens a lot,
unfortunately,
you got somebody else there to help and say, okay, I know this story, right? And I'm looking after the money pot, and I'm going to help make sure the family keeps along that storyline.
Yeah. Well, this has been good, Adam. I appreciate you sharing your journey and some of your wisdom. If somebody wanted to get in contact or learn more about what you're doing, what's the best way to do that?
Yeah. So our website is fireweedcapital.com, or you can email me, adam@fireweedcapital.com. I respond to all the messages I get. I get a lot of emails, but I love hearing from startup founders and software engineers. So please.
Well, good. Well, Adam, I appreciate you taking the time. Thanks. Thank you very much.
Yeah, thank you. Have a great one.
You too. Thanks for listening to Startup Stories from the Treehouse. If you enjoyed this episode, please take a moment to like, follow, or subscribe wherever you get your podcasts. And if you found our conversation helpful, leave a review. It really helps other founders discover our show. For more insight and episode summaries, don't forget to subscribe to the Wildfire Labs Substack. We appreciate your support and can't wait to share more stories with you next time.